Good afternoon, good evening, wherever you are at on this great blue earth. I am your fabulous host once again, Skye Logan. I have a very special treat this week. As you may or may not know, I have a special guest speaker back once again, Mr. Eric Miller.
Thank you, man. Good to be here.
Yeah, absolutely. Absolutely. From Econologics, he has spoke previously, and some of you might have caught that. And I love having Eric here. He's a wealth of information, and we're going to be talking this week on risk mitigation. And what does that mean? And what is risk mitigation itself, and how to get that in on your portfolio, et cetera, et cetera. Okay. So there we go. Some topics, some bios for myself and for Eric. And it's going to be a kind of a loose conversation about it. But as usual, there's a chat window. Feel free to chime in there on any questions you have for myself or for Eric. He deals in a lot of advanced tax strategies, a lot of advanced investment strategies. You might not like me saying that because...
You can say whatever you want to. Yeah.
I can?
Yeah, why not?
Yeah.
Yeah.
All right.
So far, so good on the compliance line, right?
That's right. So yeah, feel free to use that chat window on any questions that you have for himself or myself. And other than that, we're going to just get diving in here on our conversation. So Eric,
Yeah, man.
I'm just going to let you kind of run with it and let's talk about risk mitigation. What is it?
Risk mitigation. So, I think the simplest way to define that is that, you have different risks when it comes to your income, your assets, your money. And, you look at the risk that everyone has out there. Of course, we always have a risk that, we're going to get sued for some reason. Yeah. Hopefully that doesn't happen, but it is a risk out there. I think the last stat I saw was you can sue someone for like $130. That's it. So,
spend $8,000 to get your $130.
Exactly. So the point is it doesn't cost very much for someone to sue somebody for anything that they want to.
Wow.
So it's like, okay, so if that's the case, then you better do something to protect your assets. Yeah. So of course you have risk of lawsuits. You have, risk of taxes is a risk. Inflation is a risk. I think we did a study. There was like 72 risks that a business owner has.
Wow.
All told. So, and not all of them are obviously going to come to fruition, but I think it's better to be totally prepared than not. And risk mitigation, of course, is just finding what those strategies would be that would help minimize the chances, the probabilities that if you did get attacked in some way, shape, or form, that you're going to lose your assets. So that's the basic definition of risk mitigation.
Yeah. Wow. So give me a horror story. If you can think of one. Probably what is one of your worst things that you've heard of, that you've experienced from somebody or someone else, not you, but I'm curious. What's the worst?
So I'll give you a story. So there was a dentist that had a really, really big practice. And, let's say that his net worth was $20 million. Okay. So he had someone in his office, for whatever reason, drive a car and for some business related, an employee. Okay. For some business related reason. All right. And there was an accident. Okay. Now a dentist can be sued. He doesn't have much protection on his corporation because he can be sued personally. And there are some professions where that can happen, where the corporation doesn't shield you. So there was a pretty bad accident that happened. And because this dentist, who owned a lot of property, he had a lot of personal assets. He ended up losing almost $10 million in lawsuits personally. Yeah.
Oh my Lord, that's
a pretty bad, from the look on your face, that's a pretty bad horror story. And there's gradient scales of this, of course. Yeah. I've had clients that have had kids that have gotten in accidents, and of course, lawyers are going to go after where the money is. They're going to go after where the assets are, and the kids don't have it, parents do. So there's all these things that can happen that you just don't see coming. But it's just some very, very simple planning to mitigate the risk
Yeah.
of something like that. But that's a pretty bad horror story.
That
right
is
there.
horrific horror story.
Yeah.
Definitely a sue happy or, whatever. I know someone that got into a small little fender bender, really minor. One of the first pieces of mail that they received from the other side was from their attorney immediately demanding what your insurance was and your insurance caps.
Right.
They were right after, good, what's your insurance and how much are you covered for?
Correct.
And they're immediately going to just go for whatever. If it's a $200,000 policy, then okay, good, $200,000 suit or whatever. So it's crazy how and I talk to my wife about this all the time. We drive up the 19, count how many billboards are for injury attorneys, injury lawsuits. I've only seen one for the Duncan Duo real estate type of thing. Other than that, there was 11 for attorneys.
They're going to go after the path of least resistance,
right?
They want to get the maximum amount for their client with the minimum amount of effort.
Yeah.
So if they're looking at a client, and you have a lot of investors who have a lot of money, right? And if they're looking at a client that has, millions of dollars of money just sitting in a bank account in their own name, if they see that there's, all these assets that they have are just owned individually, by the person, they're going to be like, wow, this is going to be easy.
Yeah.
But if you have someone that has separated out their assets, they've unbundled their assets. The terms are called unbundling, basically, is when you take a certain asset, you try to compartmentalize it so that it's owned by itself. So that if there is a lawsuit, then it's kind of separated out and may not be part of, the attack.
Yeah.
So there's things that you can do, but I mean, that's what attorneys are going to do. They're just going to look for the path of least resistance. So doing nothing is definitely not the answer.
Yeah,
that's for sure.
Doing something
is definitely the
whatever
answer.
it is. It's making it more complicated for them to get to it and unbundle it, even if it's in LLC is different. I know one tactic is how useful is having an LLC in Delaware, having an LLC or a S Corp in Nevada, like all this other cross state stuff.
You do see that a lot. I think the main thing you want to think about when it comes to asset protection is that you want to do it while the financial seas are calm. Okay. So that would be the first thing I would tell everyone is okay, look, if you don't have a threat of a lawsuit, if there's nothing on the horizon right now, this is the perfect time to start looking at putting in strategies to mitigate what would happen if you do get sued for some reason.
Don't do it when it comes.
Do not do it after the fact, right? There's a term called fraudulent conveyance. And basically what that means is that if, and this happened with Hulk Hogan, I think, he had a son, that got in a car accident. And then right after that, he had moved all of his assets into LLCs and limited partnerships and all these different business entities. And I don't know exactly how it turned out, but I think the judge just basically said, okay, you did this because you knew this was going to be, there was going to be a lawsuit against you. So they can unwind all of that. You don't go to jail for it. It's not like you're going to do time because you do that. And I would probably try to do something better than nothing. Yeah. But the likelihood that the judge would just say that's fraudulent conveyance, you can't do that.
Yeah.
So you'd overturn it. So try to do all this stuff while the financial seas are super calm. There's not a threat of a lawsuit. That would be my first advice right there.
Right, similar to life insurance.
Yes.
Doesn't help taking it out after the fact.
No, it doesn't. It's not going to work very well. Most insurance companies aren't going to do that.
No.
But there are some tools of asset protection, and I think there's 4 main tools that'll go into that. And I think I'll answer your other question on that.
Yeah.
So, the first thing that you have kind of in your toolbox would be the state that you live in has certain state statutes that protect certain assets. So for Florida, for example, if we have people that live in Florida, 100% of your house, if you homestead it, is protected from a creditor attack.
Okay.
So if you got sued for whatever reason, it wouldn't matter. Your house is completely protected. Certain life insurance and annuity contracts in Florida, completely protected.
Okay.
So, you just have to go through your state and find out what are the laws on certain assets, and then of course, utilize those. So that would be the first one, would be state statutes. Second one would be insurances. So you talked about that, everyone should make sure they have professional liability insurance for their business specifically. Another thing I would make sure that you update your employee handbooks and all of that, because the environment right now is that a lot of employees are attacking their employers for whatever reason. So I would make sure that my compliance lines on my HR are very, very good shape, and just make sure that you have proper insurances that would cover, if someone tried to sue you for some reason.
For instance, like workers' compensation, obviously is an insurance, errors and omissions.
All these things.
All those. There's probably 7, 8 major ones that could be carried.
I would call your insurance people just to say, okay, are we up to date, based upon the environment out there. So insurances, there's also something called an umbrella insurance. Like if you own a home and you have car insurance, you can get what's called umbrella insurance. Would be like if you got in a car accident, like that doctor that got in a car accident. Okay, if you had an umbrella policy for $5 million, that would have covered part of that, right? So insurance would be another thing. And then you get into business entities, in which what you were talking about, like LLCs and limited partnerships. And we can probably, and of course, I'm not an attorney. So I just want to let everybody know that.
Disclaimer.
I'm not an attorney. So make sure that you talk with your legal professional about all these things. I'm giving you basic general advice.
None of this is legal advice. You're talking to two guys here that
just two dudes.
dudes.
Just two dudes talking finance. But to your point, is it valid to go into these different jurisdictions? I think that enough people do it that lend me to think, okay, there's probably some layer of protection that they do get that would make sense. So again, I would just talk to your attorneys, and it really isn't that big of an expense to do that. Like we have a Wyoming Llc for our business. Okay. So we did that just because the LLC, the rules on LLCs was a little more favorable in Wyoming. And that was one of the reasons that we did that. But Florida's not bad. But whatever state, I know we have people that are all over the place. So whatever state that you're in, you would just need to contact an attorney and say, what, are these pretty favorable laws for these entities?
Yes, there's no right or wrong for sure. But the key takeaway here is be prepared.
Yes.
If you're a Boy Scout. Are you a Boy Scout by chance? Oh, okay. Fair enough. Be prepared. And predict, it's just seek counsel, talk to an attorney, make sure that you prepare beforehand.
Definitely do something beforehand. Yeah.
Whether it's looking at your state statutes, whether it's whatever, there is a list of things to do, but be protected, because worst case scenario is, again, something that you don't want to, knock on wood, you don't want something's definitely going to happen, but what if?
Yeah.
What if it does happen? I have a pretty nice umbrella policy just to help cover for all these things that I can't predict, but it helps cover a lot of different things.
Yeah.
Now, let me ask you, would having your own family structure in its own LLC or any type of structure, and then some various things, there's all kinds of crazy structures I've seen.
Totally. Yeah.
Is that like, I don't know if that's a important thing to kind of go over here right now, but is that a thing at all?
Well, yeah, I think, look, you just have to look at assets that you have. Okay. And, a lot of people own real estate. Okay. So in most cases, most of your real estate holdings should be held in some kind of a limited liability company. Now, a lot of people own a lot of different properties under one LLC. Okay. Now there's a risk there, because if that LLC does get attacked and it gets unwound, then all of the properties that are in that LLC are open for that. So this is where I'm talking about unbundling. It may make sense to, like, if you're going to own a property, just have one LLC that owns that property. Buy another property, have another LLC that owns that property. And you don't have to do that. I mean, LLC is pretty good asset protection, but it's like, how deep do you want to go? Like, how much do you want to spend? Because it would just be an accountant thing that would increase your expenses when they have to file.
I imagine at a certain point it's a cost, because you obviously have to pay fees.
And if your net worth is getting up there, $5, $10, $15 million, is it worth, it costs $500 or $1,000 to get an LLC, and it may cost you, a couple $100 extra in accounting fees every single. Is it worth it? Right? Is it worth it? That's all you have to ask yourself. I think in most cases, spending that kind of money. When you're starting off, you don't have much assets, you don't have to do that. But as you start to build your net worth, you got more to lose. So I would definitely, spend the money to do that.
Probably some percentage of that overall revenue, whatever that is, whether that's a 2 or 3% in this area, the risk mitigation to lower those or mitigate that exposure.
Yeah.
Is easily 2%.
I would definitely do that. So for real estate, I think an LLC for like brokerage accounts and cash and, things that really don't create a liability, because I don't think money sitting in a bank is going to create a liability. I don't think so.
No.
So
hopefully not.
Those are usually owned from what I've seen, and I've dealt with a lot of people that have sold their businesses and have lots of cash. Most attorneys would tell them to hold that in what's called a limited partnership, which is very similar to, or family limited partnership.
Okay.
So it's very similar to an LLC. It's just there's a general partner, there's a limited partner, and it just offers different layers of asset protection. Okay. So if I had a lot of cash, I definitely wouldn't hold it in my own name.
Yeah.
Okay. I would hold it in some kinds. When I say a lot, I'd say like over 250,000. I would probably hold some kind of limited partnership.
Okay.
And then there's one other tool that you have that you can title an asset. Like if you own a house, right? Yeah. And you guys own it like joint with rights of survivorship. Yeah. Okay. So in certain states, there's like 20 of them. You can own something called tenants by the entirety. Okay. And what that allows you to do is like if you're married, then you can own that asset with your spouse, tenants by the entirety. If you got sued, the creditor couldn't force your wife to liquidate the money to pay the creditor. So it has some levels of protection there. Yeah. So there's all kinds of stuff you can do. That's what I'm saying. There's like, there's retitling assets, insurance, business structures, there's just a lot of tools available to you. And it doesn't really cost a lot of money to do all that. So,
yeah. Okay.
Yeah.
All right. So I have a discussion. Many of you have talked with me, obviously, a lot of our investors that we work with, you're going to go for a very high yield or high return on whatever investment that you're going to be doing. And with that, it's almost like it's similar to real estate. With demand comes, they always say like there's supply and there's demand. Well, the price actually follows that demand is what usually measures that. The same thing with an investment portfolio. Quite often that higher risk will give you higher return, so if your exposure is there's gonna be a actual point when your risk is so high. Again, that's that risk mitigation. You got to take advantage of. A lot of our clients come into us because they're so exposed. They need something that is super low risk.
Talk about like on their investment portfolio.
On other portfolio.
Yeah.
Maybe they have 10 other investments they're doing.
Yeah.
But they're so exposed on way too much. There's a toleration point on their entire portfolio where you got to do some kind of risk mitigation investments such as ourselves. Higher return is possible, but the key factor on it, who cares about the return? It's the fact, does it lower your exposure on your
alternative investment and alternative investing? Yeah. So this happens all the time because you look at a business owner, most of their wealth is in the value of their business. Yeah. Right. And they have an enormous amount of their household wealth is the value of your business. Yeah. Right. And then of course, brokers and financial advisors like myself say, oh, you know what? Take a lot of your investment money and just shovel it into the stock market and, buy the stock market. Yeah. Okay. And of course that has a lot of risk to it as well. Yeah. So to your point, people have like, if you like put on a graph of risk, 7 being the highest, 1 being the lowest, 90% of most people's wealth is probably in that 6 or 7 category, and they don't have much down here at all. So, I think people need to take a good hard look at that and say, because if you're going to run your household like any business that I know has, number one, they have massive reserves because they don't want to be exposed if something bad goes happen. So like a lot of these big corporations, you heard this on Warren Buffett, he had like $20 billion of cash that he was sitting on. Okay. Now he's worth much, I don't know if it was that much, but he's worth a lot of money. Yeah. But he had a lot of reserves in cash. Okay. So I would certainly, first off, I would look at that, make sure that you're insulating your household with a lot of reserves or liquidity that you would have. Okay. But you also want to look at alternative investments because, let's face it, most people just think that if I'm going to invest, I got to invest in public securities. And I'm like, no, there's
huge amount.
There's a huge market of private equity, private businesses, private real estate, all these things that you can invest in, where your yields probably are going to be, I'm not going to say they're going to be higher, but you have the potential there to do that. And I think with what you guys do, that certainly, falls in that category. And it's as long as it's, I heard somebody say this, I want to buy things, or I want to invest in things that are going to pay me to own them. Right. And
that's a good,
that really is to me a very good philosophy of when it comes to investing. I'm going to invest in things that are going to pay me to own them. People are going to be mad at me when I say this. Bitcoin isn't paying you to own it. There's no cash flow that is derived from that. It's just a speculative investment that just happens to be going through the roof right now. And if you own it, great, but it's very, very speculative. So I think people have to really start looking at their overall household assets and say, maybe it's time that I start putting 10, 15, 20% in some of these lower category alternative investments. So I'm not so like top heavy when it comes to that.
Yeah, for sure. A little bit more of a conservative view, especially in times like now that you're not quite sure what's going to happen. And I'm a little bit more conservative with all my investments as well. When I go to Vegas, when I do different stuff, I'm not a gambler.
Throw down 10,000.
Let's go right after this. No, I'm not a huge.
Lights are cheap.
They are super cheap. I was looking at those. I'm not a huge gambler. So same thing with my investments. And different people have their own tolerance of like, I don't know where you're at on it, but I don't like speculation at all. I want to go steady, just steady as you go.
Here's my thing. Speculate in areas that you have control over. Right. And most people have control. Not enough people invest back in their business to expand that. They stay at a certain level and that's it. So, if you're going to invest, why don't you speculate back into the things that that got you there, right?
That's good philosophy.
Preserve your reserves and don't lose money from your profits, right? And take a portion of that and put it in things that are going to be fairly stable, that are going to pay you maybe a 5-6% return, 7% return, somewhere around there, and build that base up to protect the household. And then whatever happens to the business, because look, man, no one saw that we were going to have to be shut down for 2 months or 3 months or 6 months last year. Like everyone thought their business would just always be able to function. Right. And that's not the case. So you got to really start looking at how do I protect my business by making sure that, I do have business reserves. It's a risk mitigation technique right there, is having a couple months of business reserves for your house, not just for your business, but for your household as well.
At least
that, it's probably more like a year that you should probably have.
I always go along the frame of mind of at least 6 months, but given what happened, a year would be so nice.
It would be completely nice. And so that would certainly be something that, lowering the risk of your investments, looking at them and saying, because look, I know people just think stocks always go up, but there will come a time when they don't. And at the same time, I think it's pretty prudent. And we did some studies on this. You look at some of the biggest corporations out there, like biggest CEOs out there. Everyone just thinks that they just they're just gamblers. No, man, they own tons of annuities, cash value life insurance, real estate, property, all these things, because they know the value of money. And they want to make sure that they're getting, income. They have income potential on those things.
For sure.
Absolutely.
All right. Any questions from anyone out there?
Questions at all?
Yes, absolutely. Hello, Karen. As usual, fantastic to see you. Or at least see your chat at least. All right. Chime in any questions you have there.
Another one would be too, I think is your intellectual property would be another thing that I would try to protect as well.
Intellectual property. Okay. That's actually a good one. Your intellectual property rights and stuff, because that is pretty huge.
Think about that. You have a know-how of how to do something. And if you don't trademark, copyright, all these things, and it's so complex. We have an intellectual property attorney that we hire. And the layers of how this works is just like, oh my God. It's like, wow. It's deep, but you protect your stuff. So people just can't pirate it and use it somewhere else. And, that you can lose money that way.
Yeah.
So not only that, but it can be, you can license it out at some point in time and, make money.
Yeah. Franchise it.
Yeah. Franchise it or something like that. So intellectual property would be another area too.
Yeah.
But I think
I'm trying to think of a great story. I remember like 20 years ago, some horror story of someone just not having their intellectual property completely owned, and someone came out and just filed for it and just owned it. And I forget what it was, but it was a pretty major brand.
I believe it. There's a lot of people think that they have stuff that isn't valuable.
Yeah.
And it is.
Yeah.
And to your point, it's not hard for someone just to take it, because there's no protection around it.
Yeah.
On your stuff. So someone can just take it. And then they can, of course, at that point in time, if you're using it, even though you created it,
You have to pay for it.
they can tell you to cease and desist using that.
Yeah.
So-
That or you're going to be paying them royalties.
Exactly. So it's crazy. It's just,
And I think that's what happened. Someone bought it out from underneath them or filed for it, didn't buy it. They just filed for it. They owned it. And whoever originally created it had to pay royalties to the original guy. It was just a nightmare of a
Yeah.
story.
I know.
You're like, what world do we live in?
People just don't pay much attention to this area that I find. Because think about that. When you own a business, all you're trying to do, like, I want to grow and I want to expand and I need to hire people. And I've always loved to do whatever this thing is, right? And life, it's fun to attack in life.
Yeah.
It's fun. Like, everybody wants to be on the attack, but you also have to make sure you are protecting, you're defending.
Yeah.
So I think that's the point. If you're spending a lot of your time on the attack and trying to grow and expand your business, you have to spend, at least 30 or 40% of your time protecting yourself, protecting your assets, protecting your household, because it's worth it at the end of the day. It really is. And to me, that's, I see a lot of people neglect that area.
Yeah.
And maybe in your lifetime, it'll never happen. Maybe in your lifetime, you'll never get sued. Maybe in your lifetime, there'll never be anything bad happens, but the probabilities are pretty friggin' low that that's going to happen.
There's always someone out there wanting to take it.
Yeah. And I think with the environment that we're in right now, and I saw this, there was a survey done, and I'm trying to remember exactly who did it, but they said that the retirement, most people were like, what's your source of retirement going to be? Inheritance. Like, really? Like, you think your source of retirement is going to be inheritance? Or on that list was a lawsuit. I'm going to sue somebody.
It was?
Yeah. That's scary, man. That should be freaking terrifying.
Someone's planning on.
That's what they're doing. All right. That's frightening to me.
Wow.
And as people become more, I mean, look, we are in an economic system where people are getting poorer, right, every single day.
Yeah.
And that is going to cause a revolt or attack, and they're going to attack people that they think have money.
Yeah.
And private business owners, even though you're not the ones that with the billions and billions of dollars, you have $5, $10, $15 million, you are at a target.
Yeah.
So you got to do something about that.
So you all over at Econologics, you help with this kind of thing.
Yeah.
Yeah.
So what we do is, we're financial advisors and we do planning. So we work primarily with business owners. And, we figured out a long time ago is that business owners are a different breed than just maybe someone that's working, a factory job or something like that. You have the value of your business, which is your biggest investment, but most people neglect their household. So we specialize in really showing them how to make sure that they are protecting their household, that they are investing correctly for their household, minimizing their taxes, showing them how to protect their assets, and so that the business is serving the needs of the household. Because at the end of the day, everything that we're doing right here, this whole nation is made up of households. Yeah. Right. Mm-hmm. And that is really where we need to focus on, is getting the household. Everyone's responsible for your own personal economy. Yeah. And once you do that, I think that's where we try to position ourselves and help those people.
Yeah. Very nice. That's a good viewpoint to have. And I know one of our clients is utilizing you, and he's super happy. So whatever you're doing with him, yeah, is he's pretty happy on his whole protection and all that.
It really is not, it's not hard. It's pretty simple. And, we lay out a plan. These are the strategies that you need to do. Obviously, you need to get attorneys and accountants and these other types of professionals to help implement these things. But, our job is to make you look in an area that maybe you're not comfortable looking at.
Yeah.
And then once you can see, okay, these are the things that I need to do, then most people do it. They'll execute. But, most people aren't really they never were taught this.
Yep.
So this is where we'll just look, okay, there's the out point. Let's correct that. Here's the person to go to get this done. And then it's done. And then you don't have to do it all the time.
Yeah, along with that, they're not even educated in it. A huge factor that I see in so many areas is that human nature tends to, in general, we don't like to act until it's a danger. Oh, it's a slight emergency or yeah, my health, this, my that, slight emergency. When it's danger, when all of a sudden I have cancer, whenever all of a sudden I have, massive GI problems, or when my finances, or when I get a lawsuit, or whatever it is, we get real busy then.
I don't know why that is.
I don't know why.
I'm trying to think of that. Is it maybe we're just inherently lazy as hell? I don't know. I can't. I don't know.
Well, it might be a mix of good. We're lazy.
Yeah.
Two, we always hope for the best. We don't think the worst is going to happen to us.
That's true.
Or maybe it's a pie of different things, maybe. But I see that all the time.
You're 100% right. It's like you need that necessity level in order to take some action. I don't think you need it, but I just think that there's a reason why we are like that. I don't know why.
Yeah, I don't know. And so this little webinar today is kind of designed as a nightmare to scare you. Yeah, to get you to take action if you're not well set up, to really look at that.
Yeah.
Contact somebody, whoever it is that you want to contact, or if you have nobody, contact this guy. He's fantastic. His team's fantastic. You have close to 20-ish people over there or whatever.
Yeah.
Doing fantastic stuff. But definitely look at it. Okay. We're crushing it here at Equity and Help on our investments. Our clients are massive happy. I have more capital deployment happening than I can deal with. But I wanted to talk about this risk mitigation point because I see too many people that are overexposed and they need to get that fixed.
Yeah. 100%.
Yeah.
100%.
Yeah, absolutely. All right. So in the chat window here,
I can tell people if they want to email me where to go. That would help.
Yeah. So I actually created, your gal gave us a little
link. There you go. Okay.
A little link here. Reach out to Eric if you have any questions. Obviously, you know how to reach me. But in the chat window there is how to request some information from him. And so utilize that, right? Yeah,
I would just definitely say do something about it. And like I said, it doesn't take a lot of time or a lot of money. It just, it's just a movement in the right direction to, especially if you have a lot. I know a lot of your investors, have a lot of assets.
A lot.
A lot of assets. So it is an area that you do have to confront. But I said it's not really hard to do. And once you get it done, it's done.
Yeah.
You have to keep doing it every single year.
You got to pay the bill, but other than that, it's set up.
That's easy.
Like most things at the beginning work, it's the most work, but then it just trails off.
Yeah, exactly.
So, all right. So I want to thank you all for coming out this gorgeous, gorgeous day. And I look forward to catching you same bat time, same bat channel next week, 10 a.m. Eastern time. And thank you very much for coming.
Yeah, man, it was good. Thanks.
Yeah, absolutely. Thank you for coming.
See you, everyone.
Yeah, absolutely. Ciao.